Hi, I'm Shay Boloor, and this is Earnings Edge. So let's dig into Snowflake, which is probably one of the more surprising earning gap ups we've seen this cycle. But before we get into the actual print, let's talk about what Snowflake does. For those unfamiliar, Snowflake helps enterprises store, organize, govern, and analyze their data in the cloud. That matters because AI is only as useful as the data that it can access. And I think that if your company's data is still messy, siloed, or ungoverned, or stuck across different systems, AI agents aren't going to be as useful as it could be to your organization to kind of hit that max potential in the new AI economy, which is why Snowflake's role is so vital because the company isn't trying to build the biggest foundational model, but trying to become like more of the governed data layer where enterprise data, AI models, applications, and workflows come together. Management has been using the phrase agentic control plane, which basically means Snowflake wants to be the place where companies store the data, ask the questions on top of that data, build agents alongside that data as well, and then eventually turn those agents into real business actions. So the thesis on why you should own Snowflake is that if AI creates more data movements, more application development, more workflow automation, and more enterprise experimentation, Snowflake should see more workloads run through its platform. Let's get into the earnings. So I think Snowflake's quarter was really important because it's one of the really spotlighted names that directly challenges the idea that AI is disrupting all software. And we saw proof that it really isn't right now. Product revenue growth reaccelerated from 30% last quarter to 34%. That acceleration story is probably the biggest driver on that massive 40% move post earnings because the market was worried that Snowflake was going to be another software company pressured by AI, open source tools, Databricks, hyperscaler native data platforms. But instead, Snowflake showed the opposite. I mean, AI appears to be increasing customer urgency and driving more consumption. We also got some more metrics that net revenue retention increased to 126%. RPO grew 38% to $9.2 billion. And management raised full year product revenue guidance to $5.84 billion, which is a 31% year over year growth. So that guidance raise is what really changed the narrative, in my opinion, on what caused them stock not just to go up 40%, but also have a fall through the following days afterwards because management raising full year product revenue outlook by 180 million after beating Q1 revenue by about 70 million tells me that there's enough demand and usage to really provide the confidence to raise the full year forecast by more than 2.5 times the size of the Q1 beat. Like that's pretty substantial. So I think that's why the market's reacting the way it is. I mean, Snowflake finally gave us proof that its AI product is working. I mean, Cortex Code or Coco was the biggest driver of the forecast increase. I mean, it was a huge statement to call that out in the earnings report because very few software companies out there can say a new AI product that was just launched a few months ago is already creating enough observed usage to materially raise that a full year guidance. For you guys who don't know, Coco is like the Snowflake's AI coding agent. It helps builders create data platforms, applications, agents, and workflows inside Snowflake's using natural language. So that's Coco. Snowflake Intelligence is more of the business user interface that lets employees ask questions, understand answers, and take action using enterprise data. So together, these products help Snowflake move from being labeled as this cloud data warehouse company who nobody really knows yet if they have an AI boat from the AI tsunami that's coming for the whole space to wow, this actually might become a broader AI workflow platform in the new AI economy. And I also think that adoption numbers were the biggest proof point for Snowflake because now Snowflake has more than 13,600 accounts using its AI capabilities. That's up nearly 40% from the previous quarter. Coco is already being used by almost 7,000 accounts only a few months after launch. And Snowflake Intelligence customers have more than doubled quarter over quarter. So this is what's causing the narrative reset because the market's now starting to believe that Snowflake may not just be a victim of AI, but be actually become one of the software companies that benefits from AI-driven consumption. And I think that the quarter is really important because it's slowly cementing themselves to become part of that category that these applications will become the winners of the AI economy. I'm talking Palantir, I'm talking Cloudflare, I'm talking CrowdStrike. So Snowflake, the thesis was always there that Snowflake should be one of those winners because AI products are making it easier for customers to do more work inside Snowflake. And the second order effect is very real too, because if Coco helps a customer build a data pipeline faster, that's going to migrate from a legacy platform faster, or create an agent faster, or turn a data project or a production faster. And then the core Snowflake platform also sees more consumption. That is the flywheel. AI product increases usage. The usage creates more core platform consumption. More consumption gives Snowflake's more customer relevance. Then that creates more data gravity. And then it creates more opportunities to become that control plane for enterprise AI. So that's why I've always liked the consumption model in the AI world. Like Snowflake doesn't really need to know where the traffic is coming from a human analyst or an AI agent. It just needs more workloads to run through the platform. So if the AI era is going to create more queries, pipelines, applications, agents, and more workflow automation, Snowflake's going to participate in that growth as that picks and shovels play. Another big gem from that report was the AWS deal. I mean, Snowflake signed a 5-year, $6 billion agreement with AWS. That's more than double its prior contract. So I know that the biggest arguments from the bears when they probably read that headline is, oh, great, look, that's not that bullish. I mean, Snowflake's now paying a hyperscaler tax because it depends on infrastructure providers that it also competes with. I'm not going to disagree with that. That's a very real risk. And that's always been a risk with a Snowflake. But my read is I don't think Snowflake would commit that kind of level of infrastructure if they didn't expect the workloads to be there. So I think that that was more of a spotlight of like, yeah, we'll pair up with our frenemies because we know the demand is there already and we just want to get as much as we can in the near term. All right, so what am I watching out for next? I mean, first things I'm watching for is whether AI-driven consumption continues. I mean, this quarter was a major proof point. And now that the bar is not just higher, substantially higher, because the stock's up over 50% in less than a week, the market's going to now price in much more confidence that Coco, Snowflake Intelligence, and the broader AI product suite can actually drive more usage. But now as they continue to deliver, which means RPO. I mean, the RPO was probably the Achilles heel of that whole print. I know the market didn't really care about it too much because it grew 38% year over year, which is still really strong and substantially faster growth than the top line revenue number, but it did come in below expectations. So I think that management said renewals are becoming more weighted towards Q4. So I wouldn't overreact to the one quarter, but it's something to monitor because that was like, oof, don't love it, but if I'm picking holes in this excellent report, it's probably the RPO number. So again, my takeaway from this report was bravo, Snowflake. I mean, you didn't just report a good quarter. I truly believe you changed the conversation from the market's lens on who you are in the new AI economy. Their bear case is still sticky. I mean, if AI does disrupt Snowflake, it's going to compress the growth and shift value towards them open source databases or hyperscaler native platforms or Databricks, which is, in my opinion, the superior data platform just because they began their journey AI first. Doesn't mean it's always going to be better, but I do think there's multiple competitive risks assigned to owning Snowflake. But this quarter showed the opposite is really happening right now. And it showed why the bears may have gotten way too aggressive. And based on this quarter, Snowflake is making a much stronger case that it can become one of those key platform enterprises that they use to turn the data into AI-driven action. And congrats, Snowflake shareholders. You went from a 52-week low to a 52-week high within 6 weeks. And that is a rare feat. So take the moment to appreciate that. And let's hope that Snowflake continues its journey.